Hey everyone, and thanks for jumping back into the Cryptoverse. Here we are with NFA Live every Thursday. We're on my channel this week, obviously. We first have Rob from Digital Asset News. How's it going, Rob?
It's going pretty great. Thanks for having me.
And we have Guy from Coin Bureau. Looks like Guy is tuning in from a different screen than normal.
Yes, sorry everyone, it's my fault. The stream is late. I couldn't log in on my browser, so I'm now on my phone.
I mean, look,
it's good. I can hear you. I can see it.
Yeah, I think your browser must have a classic case of the bear market blues. But anyways, guys, if you're not subscribed to either Guy or Rob, links to their channels are in the description below. Make sure you subscribe, and we'll be on Rob's channel next week, and then Guy's channel the week after that. So we're just going to go through some questions and talk about the markets. So the first thing I want to talk a little bit about AI and crypto, because they're two completely different asset classes. Obviously, some cryptocurrencies have tried to latch on to the AI narrative, just like every cycle. Crypto altcoins will try to latch on to whatever the prevailing narrative is. But I'm curious, why AI found a product market fit extremely quickly. And despite tight monetary policy, AI stocks have done very, very well. So to some degree with crypto, it's like tight monetary policy is only an excuse for why things didn't go well. Perhaps the underlying reason is it's more so dubious speculation for a lot of the stuff rather than actually having a product market fit. So I'm curious, and Guy, I'll start with you first. Why do you think crypto has not achieved the same level of product market fit over the last few years as AI has? And, is there any chance of us ultimately getting there?
Yeah, it's a good question. And I think there are sort of two ways to approach the answer. I think one way you can say, one way is that it's kind of crypto's fault. One way is very critical of crypto, and the other way is a little less so. So maybe I'll start with the sort of more positive side of it. I mean, I think one of the big problems that crypto had and still has to this day was that it was a slightly more of a nebulous concept for a lot of people. I think we've always kind of struggled to get a lot of people on board with the idea of decentralized, decentralized money. An asset class that is, or especially when you're talking about Bitcoin, an asset that is credibly neutral, that can't be controlled by anyone else, that it, gives you sovereignty over your own wealth, et cetera, et cetera. All those amazing qualities of Bitcoin in particular that attracted so many of us to crypto in the first place, those are not easily grasped by a lot of people. And that's not to say that a lot of people are stupid. It's just, I think that we live in a world where those problems haven't really been front and center for a lot of people. And I think this is especially true of us in, if you like, the West, or countries with, relatively stable financial systems, stable banking sectors, etc. The idea that you might want a currency that the government couldn't easily inflate away or just confiscate, as we saw with Cyprus a few years ago. For a lot of people in the UK or the US or, other comparably developed nations, I mean, a lot of people, when I would talk about that, would be like, well, yeah, but, my bank works fine. They never really encountered much of that friction. Whereas if you speak to someone who's from a country with a much less stable economy, with a more extractive government or whatever, then, they're much more keyed into some of these wonderful qualities that Bitcoin has. So, and I don't think it's any coincidence that we've seen wider adoption of crypto in sort of less developed countries, if you want to use that term. So I think part of it is part of it has been a perception problem. And, you know, perhaps this idea that perhaps crypto's by its nature, you know, this idea of decentralized infrastructure has been a lot harder to scale, because AI, you know, we'll talk about obviously the benefits of AI, but AI is centralized. Everyone knows it. And if anyone cares, they can't really do much about it. You know, AI, the AI models that we use are developed by a small handful of companies that are run by an even smaller group of people, and you know it is only going to get more and more like that. You know, so I think crypto has always had a challenge of kind of getting its message out to people. You know, that's why channels like ours exist in a way, because it was never, I don't think it was ever a sort of no-brainer for a lot of people. AI, on the other hand, you know, they rolled out these products and they were easy to use, and they basically, I guess, ChatGPT and everything that's come out since, they basically function like more high-end search engines, or certainly that's the way that most people use them. So most people are familiar with the interface, played around with it, and obviously these interfaces got better and better and more useful, to the extent that now, you know, as we discussed on last week's show, pretty much everyone, it seems, uses them every single day, if not multiple times a day. So crypto had a harder message to get across, and arguably didn't do a very good job of that. And then you get, you know, the sort of later stage of crypto. It became much more about extraction. It became much more about easy money. Bad actors entered the space, and we got the sort of meme, you know, what's that famous quote from Peter Thiel? We wanted flying cars and we got 140 characters, or however much it was. You know, we wanted sovereign money. We wanted an alternative financial sector, and what did we get? Meme coins. So, you know, in that sense as well, crypto hasn't delivered in nearly the same way that AI has. Sorry, that's a bit of a rambling answer.
No, I mean, I think it's true. There hasn't been as much delivery, and I mean, you could argue that we've kind of shot ourselves in the foot in a lot of ways with what the industry focused on some of these years. Where, as we said, like, you know, maybe if we had rewarded more development rather than like, you know, funny memes and that sort of stuff, perhaps that would have led to a better outcome. Rob, I'm not really sure what Rob's doing over there. He just kind of keeps going in and out. I think maybe he's also having technical difficulties. Rob, can you hear us? I don't think so. I think he's experiencing the his laptop also must be experiencing a case of the bear market blues, and is not that interested in tuning in. Well, Rob, we'll come back to you if you can figure out the stream. But we'll just go ahead and move on for now. The next question, Guy, since I'm just going to be interviewing you now. So my next question is, so liquidity has been pretty tight, right? And I mean, obviously, the balance sheet of the Fed has started to expand, but it also did that in 2019. And just because it expands doesn't mean like liquidity is not necessarily tight. There's a lot of other ways to measure liquidity. And, you know, for instance, if the dollar...
Do you have internet access or not?
Oh, hey, I hear you. I hear you, Rob.
Let me go with that.
Okay. So there's not really a great way to know when liquidity will sufficiently increase to cause sort of a change in the market and lead us into the next cycle. But my question is if liquidity were to continue to remain tight and things were to devolve like they normally do in midterm years, what would you say? Like, what would you think would break first in the crypto space, if anything, right? So some examples would be like stable coins, leverage, treasury company, just whatever you can think of. I'm curious, like, what do you think is the first thing to go? Because remember, in 2022, it was things like Celsius that went, like things that were the most egregiously doing bad things. And then as the year went on, the slightly less frothy, but still very, very frothy businesses that were doing things they shouldn't be doing, like FTX and some of the other ones that just got caught up and everything, then they went down. What are we looking at this time? What do you think? What do you think's the easiest, the first thing that's going to start to struggle?
Yeah, it's a good question. I guess, I mean, if you think back to 2022, the interesting thing was that I guess if you wanted to pinpoint the actual moment it all started, was the collapse of Terra, the Terra Luna disaster, which was obviously linked to an algorithmic stablecoin, and what was it, UST. So I think that, and you mentioned stablecoins as a possible point of failure there if liquidity was to dry up. I mean, for what it's worth, I think now we're at the stage where stablecoins have grown so much and have, if you like, the fact that Circle is now a public company, the fact that Tether has through the likes of Howard Lutnick and Cantor Fitzgerald, has fairly close ties to the US government, and is also now issuing, its own US-focused stablecoin, which is USDA, I think. So I kind of think if liquidity dries up, then stablecoins will probably be fine this time around. And there are algorithmic stablecoins out there, but nothing like with the market cap of UST. So I kind of think they'd be all right. You mentioned leverage. Obviously, leverage is kind of what made the October the 10th crash all the worse. All that leverage that had built up. And I think, leverage will build up because people love to gamble. Perps market, if you look, things like Hyperliquid. Hyperliquid is one of the few crypto projects doing well at the moment because there is still that demand for perpetuals. There is still that demand for leverage. So, I don't, whether that sector would suffer in the absence of liquidity. I don't think so, because I think it's so kind of tied to the gambling aspect of crypto. I think it would be more likely to kind of hold on, which you can see as either a bit of a shame or something to celebrate, whichever side of the fence you're on. If you look at other things, I mean, you mentioned treasury companies there. I mean, we're already starting to see that unwind, and I don't think there was anyone really out there who, when this whole treasury company meta sort of really kicked into gear last year. Obviously, MicroStrategy, now Strategy, has been doing this for years. So, but it was more the imitators that sort of really cropped up a lot last year, wasn't it? And we've seen, I mean, Peter Thiel has just exited ETHZilla, one of the big Ethereum treasury companies. We've seen potential and actual selling from a number of others. So, yeah, I think if liquidity continues to dry up, more and more of these treasury companies are going to get hit. So that is definitely probably one of the more vulnerable parts of the market, I would say. Others, we've just done a video on miners, on the situation for Bitcoin miners at the moment, because they're obviously in a fairly tricky position in that, they're kind of getting hit with a perfect storm. Not only is the price of Bitcoin going down, so that's obviously bad for miners. But electricity costs have been tight because, you guys had a big winter storm out in the US fairly recently, I think, which actually took a lot of miners offline for a bit. And then you have the fact that electricity costs are rising, and that is tied, obviously, in large part to the rise of AI, to all these data centers that are consuming all this power, competing with the Bitcoin miners and, with the rest of the grid, in a way. And interestingly, we're now seeing a lot of miners kind of pivot towards AI compute, providing services for AI companies. So the mining sector, I think, is always going to be vulnerable as well. But really, I guess, in terms of liquidity drying up, what is really going to suffer? Altcoins. It's been going on, and it's probably going to continue. These are the most speculative assets. People will continue selling them either for stable coins, which they might go and deposit in DeFi protocols to earn yield, or they might just hold, looking for dip buying opportunities. They might rotate it into Bitcoin. They might also rotate it into things like tokenized gold and various other tokenized assets that are coming up. But yeah, the more liquidity tightens, altcoins will suffer first. And I think that will gradually sort of kick on into things like treasury companies, alt layer ones and things like that, which if you want to lump them into the altcoins category too, it kind of, I guess it sort of cascades. And then you've got at the very last, the very last to fall, so to speak, would be Bitcoin. I think, I don't know if you, I mean, I imagine, Ben, you would agree with me that probably most liquidity will flow back to Bitcoin as liquidity overall tightens.
Yeah, I mean, I think dominance of Bitcoin will eventually go higher, but it's struggling right now. I actually looked at a interesting chart. If you go to TradingView and look at Bitcoin dominance, it's actually been kind of struggling to go higher. It's like 58, 59%. But if you exclude stable coins, it's actually continuing to go up. And it's interesting because if you actually look at any of the major altcoins, like if you look at like Ethereum or Solana or BNB or any of the big ones that are taking up like a larger part of the market cap of the altcoin market, they've all just been bleeding to Bitcoin. So it's interesting that Bitcoin dominance has gone down, but then when you see that stablecoin dominance is just shooting higher, it makes a lot more sense, right? Rob, while we have you here, hey, by the way, thanks for deciding to join. It's great to have you. Great to have you back. Some people said that your internet was bleeding to Bitcoin, I think.
I got liquidated. I had to shut everything off.
Yeah, I mean, who can afford electricity and everything else in markets like this? So basically, the last thing we were talking about is if this bear market continues to go on and liquidity continues to tighten, what are the big what's like the first big domino that you think will fall?
When I take a look at like open interest, well, first of all, everybody, sorry, this is Puerto Rico Wi-Fi. I apologize. But if you take a look at like open interest and liquidations and derivatives and everything's going on, you would think that that would be the first thing that would go, because you've got people shorts and longs, leverage plays. But if you look back, and there's here, I'll show you, because I thought for sure that would be it. That'd be the first one to go. But if you look at this guy from CoinGlass and just take a look at Bitcoin open interest, I mean, you can do it in dollars, but it's, of course, obviously in yellow is the Bitcoin price and green is the open interest. So whatever people are doing, leverage and shorts and longs and things like that. But if you just take this and put it into Bitcoin, it's a different story. So like under this right here in yellow again is the Bitcoin price. I would think that as the Bitcoin price, this is last cycle, 2021 to 2022. I would have thought that you would have had everybody just kind of, dry up. But it looks like as it starts to go down, people want to play the game and they want to short everything, and that actually revs up. So right now you can see that it's actually gone down, but not as much as you would think it is. There's still people who want to gamble, and that's pretty much what has attracted a good amount of people to our market, much to our dismay. But I thought that would be it, but it wasn't it. I stole some information from this website, and I just overlaid the M2 money supply with T5, which is taking out Bitcoin. And you can just see that even for like liquidity, like when liquidity drops, like last time in 2022, look how much the market cap for essentially alts went from 1.45 trillion down to 359 billion. So if you're looking at the ones that are really getting crushed, it's pretty much that. And then just to piggyback on your point is I took a look also for T7 or MCAP 7, and this is for stable coins. Just what's the only thing that it has to deal with is the stablecoin market cap. And we can see that, and I'll always thank Guy for telling me this. The big use case is payments. When I take a look at this, just going up, market cap for stable coins, Guy was right. And that's pretty much it. So yeah, it's all alts are going to bleed first, which they've been doing.
They're doing what they do best. And let's bleed. So yeah, no, I mean, I actually saw some interesting charts. like over the weekend where it was showing, just how much selling pressure there's been in the altcoin market.
Yeah.
And I think that it really does kind of show like why things are the way. And we've looked at like the social risk and stuff as well, and you can
Yeah.
see that like essentially like no one is here. There's a chart I want to show, so I can pull this up. So this guy posted this chart. Let me share my screen.
Remove me and switches.
Yeah, let me do that. All right, so yeah, his name's IT Tech. He shared this chart. So this one, and it's the 1-year cumulative buy-sell quote volume difference for altcoins, excluding Bitcoin and Ethereum. And like you can just see like how much selling pressure there has been on altcoins. And it barely even like I don't know, like when I look at charts like this, it really does kind of support sort of the social interest view of like people just don't care about a lot of this altcoin stuff. They just don't care. They're tired. They're frankly tired of getting rugged. They're tired of the promises, and they're moving on to something else. And I mean that's just the reality. Like that's the reality of what's ultimately been playing out. And I think as an industry, we have to have some like self-reflection on what we promote, what people choose to sort of support, and hopefully eventually the industry can thrive again. But it does, I mean, it really kind of puts things into perspective of how bad things are, and how bad they've been in the altcoin market for basically the entire cycle, right? For basically the entire cycle. So let me
it's been pretty rough.
Yeah. Okay, I'm gonna continue and we'll ask another question here. The next question I have, and Rob, I'm gonna start with you on this one before your internet leaves us again. What do you think life's gonna look like in 5 years? Because I was thinking about how different, like I remember back in 2022 and 2023 when the AI technology really started to take off. I like checked it out and I was like, yeah, like this is cool, but it still kind of sucks. But then now I look at it and it's completely different, like today than it was back then. It's so much better. So what do you think life's gonna look like in 5 years?
5 years is, well, things are moving so much faster than AI than it is in the crypto space. Like how long have we, I mean, Bitcoin 2009, but then you had, Ethereum come along, and then you had the L2s and everything else. Like, I just got a quick question again for everybody. What are you using your crypto for? And are you using crypto more than AI? And that could be Perplexity, ChatGPT, that could be Gemini, whatever else. But in the next 5 years, there's a couple of things. Throw this up. It was hard to wrap my head around. This is from Elon. And he talks about this happening in the next 10 to 20 years. The most likely outcome is that AI and robots make everyone wealthy, in fact, far wealthier than the richest person on earth. And he talks about this, it's called a post-scarcity market, where everything becomes super cheap because everything is being produced at next to nothing. But to talk to you, Ben, about the 5-year thing, it's going to be painful, I think, to get to that point, if we even get to that point. Like we talked about this, you take a look at the ChatGPT launch, end of 2022 and 2023, and then S&P 500. The blue is the total job openings. We can see how those have pretty much gone down. And we keep hearing about layoffs happening. So it's either you're going to use AI and get 10 times better, or you're just going to be kind of passed off. And that's the big thing. And that's what's going to happen right now. And then I just took a look at this from the Kobeissi letter. It talks about post-grads, college students. Once they get out, it's pretty stable, but they're at like higher unemployment levels for finding a job. Looking at the same amount from 2020 during the pandemic, which is pretty bad. But if you can take a look at that, it's been 41, 42, 43 for the longest time anyhow. So when I take a look at like this type of thing in the next 5 years, it's anybody's guess. But if we go into like this post-scarcity thing, and I'd like everybody to just research that, post-scarcity markets, it's a crazy process. It's a crazy thought, but if you think about it, it kind of does make sense. You've got these robots, AI that can do a lot of things that all white-collar workers can. And you have this that comes in and they can actually create houses, they can create infrastructure, they can create products, they can create services, and they can kind of go down that route. The thing is when this happens, there'll be a massive amount of things that have to actually go through to actually create these AI robots and AI and everything else. But then as time goes on, it kind of goes down to, well, how do people get paid? And it's just going to be, from what I can gather, just a bunch of UBI, universal basic income, and come down to this crazy level. So it's hard to explain. I'm doing a pretty poor job of it right now. But if you just took a look at post-scarcity markets, it's something that could happen on the best side. I will say on the flip side, there's always going to be people who want recognition and power, and they want to control as much as they possibly can, and they're not going to easily allow that to happen. So if that does come through, great. In the next 5 years, I see a lot of jobs being lost. I see a lot of heartache and problems. And I see the people that don't own any assets are going to be the one that are going to struggle the most. And I think that's where I get this necessity to invest into things like Bitcoin, like land, like real estate.
Yeah, I mean, certainly the narrative for crypto sucks this year, but to be fair, it always sucks every midterm year. Hopefully we'll see some better narratives in future years. Yeah, I mean, it really is interesting to think about, like what the world could look like. Guy, what do you think in 5 years the world might look like? Do you think it's going to look a lot different than today?
I think so. Yeah, I think so, because we just seem to be accelerating now. Because I think back, I tend to think in terms of sort of major kind of life moves or events. So we're now in 2026. I remember when my wife and I, when we moved here to Dubai, that was late 2022. So I kind of think of things, post Dubai and pre-Dubai for me. And, I remember where we were living and stuff. And I look back to 2022 and I think, not quite unrecognizable, but heading in that direction, because the tools available to us now are just so different. And funnily enough, even just looking around Dubai, obviously this is a fairly unique place in terms of all the development that's going on. But it's kind of changing before our very eyes. Physically changing. More buildings and roads, etc., being built. But I mean, so yes, I think the world will look very different in 5 years' time. And I think the question that has to be asked, or for me, the big concern is, what are younger people, specifically younger people, going to do? Because I feel that, I really feel that the Gen Z, the generation coming up now, has been really screwed over in so many ways. That and Gen Zs get laughed at a lot, and for good reason. But they've been very unfortunate to kind of grow up with sort of unfettered internet access, which in many cases has fried their brains. Not all. I don't want to stray too far into generalizations here, but it's certainly very noticeable that they're suffering from things like way too much exposure to screens. Meanwhile, they can't buy a house, they can't buy their first home, and as you've just pointed out, Rob, job openings are going down, so they're being screwed from every possible direction. And the thing that I wonder about is, if that isn't addressed, then how does that end? Because historically, if you have a lot of bored, frustrated, and angry young people, then that usually only ends one way, and it's not pretty. it's blood in the streets, basically. And that might sound a bit, like hyperbole, but what are they going to do with themselves if there's no jobs for them to do, if there's no houses for them to buy? And this is not just something that we're seeing in Western countries. China's youth unemployment rate, which they won't officially confirm, but I've heard 20% bandied around. Then 20% of young Chinese people unemployed.
Wow.
That sooner or later, that is going to manifest itself in ways that probably won't be pretty. So I think one of the big questions for the next 5 years is how that plays out. Are we able to, is AI, which is, I think you're right to say, Rob, it's promising so much, and it really, it's already revolutionizing things, and I think that is going to continue. But is it going to just exacerbate some of the huge kind of fundamental problems that we have in society today? And I think those are things like inequality, wealth concentration. It's all very well for people like Elon Musk to say, oh, this is going to create superabundance and stuff. He would say that. He's about to be a trillionaire. Do you know what I mean? It's sort of like, I'm not arguing for socialism. I'm not arguing that we should have some great big redistribution of wealth or something like that. But what I'm wondering is that if AI is going to just concentrate wealth further, then that is just going to create even more of an underclass, which is already growing. The statistics are wild. The amount of assets controlled by a tiny sliver of the population is crazy. So if those current tensions, inequality, wealth concentration, social division, the geopolitical tensions that are arising now, because obviously we need rare earth metals to build EVs and data centers, and we need uranium to power it all, and the geopolitical tensions around that exacerbate, then that could make the world of 5 years' time a lot more unstable than the world we're living in today. On the other hand, some things will probably be absolutely incredible. Like medical tech, for example. That AI is supposedly already making huge changes there. So the quality of life for a lot of people may go up, may improve kind of exponentially over the next 5 years, 10 years, 15 years, etc. But I think the world itself, unless some real progress is made solving some of these fundamental problems, the wider world is going to get a lot dicier. And I hate to be pessimistic like that, because I think the technology exists and the human ingenuity exists to right some of these problems. But I just don't see it happening right now.
I think you're right that like things will probably get cheaper. So then things that maybe were unobtainable for certain people might become obtainable. I could definitely see that happening. I'm curious, obviously there's a certain level of excitement with what the future holds and how it could look in 5-10 years, probably very different than today. In the short term, how are you dealing with this bear market? Like, how are you dealing with this, the case of the bear market blues? Like, we talked about this back in 2022 as well. These years just suck when even in the case of like not even owning, like I don't even really own hardly any altcoins at all. And I haven't in like 5 years, but it still is, even though I'm not in that, it is still depressing, to just kind of watch the market crumble. What do you guys do? What are your thoughts on getting through these times and getting people to like look at maybe like the silver lining, if you can look at that? What do you think, Rob?
Well, I'll just say that this is some of my favorite times, because I don't have to, like on my channel, I have to deal with a bunch of tourists who are telling me everything about how altcoins are going to go to this, and it's going to be awesome, and I'm a moron because I don't understand whatever, fill in the blank. I'm like, yeah, okay, great. And then now we're at this point where it's like all those people are gone, and now the people that have been here for 2, 3, 4 cycles, they're like, we get it. This is what's going to happen. So let's just get through it. So I get to talk about those things, and it's great. I don't have to keep up with so much information because things are streamlined, and then I get to focus on the other stuff, like my Airbnb properties. Today I have to go fix a damn pipe because stuff's broke. So I don't have to deal so much with dealing with this stuff because everybody just gets it, and they know where we're going, and they know about just take a look at moving averages, 200-week moving averages, and just kind of wait, and then dollar cost average. It's just what gets me is like when we rebound and everybody's there to tell me, fart coin could be a next big thing. Okay, here we go. So yeah, like right now, it's not awful. I actually prefer sometimes these days, but it's going to be, I think, again, for quite an expanded time frame before we actually bounce back.
Yeah, Guy, what do you think?
I love the idea that during a bull market there are just pipes going unfixed, leaking pipes all over Puerto Rico, just going unfixed because you're just. I can't fix the pipe right now. Fartcoin is going ballistic.
Well, why do you? I mean, Guy, if the Dow is over 50K, I mean, had you considered that?
Yeah, I'd be considering. I can hire someone to do that for me, Guy. Come on, I don't have to go do this.
Fix the pipe. I'm too busy. Yeah, I'll pay you in Fartcoin to do it. Yeah. But do you know what I didn't? I was going to say, do you know what I did this morning? Do you know what I didn't do this morning? When I got up, so every morning I get up. First thing I do is read and drink a coffee for the first sort of hour or so of my day before I go online. Then I switch on my computer and deal with messages and work stuff. What I didn't do today was look at crypto prices at all. That would normally be one of the first things. I'd open up CoinGecko, see where it was. I saw the tab and I was just like, nah, I know where it's going to be. It's going to be around 60K. Who cares? So I thought, wow. Afterwards, I thought, that's interesting. We're truly in a bear market where I can't even be bothered to check CoinGecko every morning. So I mean, but that's kind of, I guess, if you like, one of my ways of coping with it. It's like the market is boring, so I'm just going to not ignore it because it does form the foundation of my job. But I'm not going to let it worry me. I'm not going to waste too much time logging on, getting depressed. I'm just going to move forward with my day. So that's one way that I'm coping. I'm also coping by talking more about AI, as you probably noticed on this stream, but just kind of thinking about AI as well, and playing with some of these incredible tools and thinking about what the future holds. Also, I'm trying to read more books as well. I'm trying to make this a record year for the amount of books that I'm able to read. So, and that has the added benefit of just being kind of a bit more analog. And I really think that one of the great freedoms of life now, and especially in the future, is going to be the freedom to switch off and just not be online for a period of time, whether that's an hour, whether that's a few hours or a day or a week or whatever. So I'm trying to enjoy a bit of offline time as well.
I mean, that's really where life is, right? Just actually going
out. That's where the really good stuff happens. Yeah. From my experience.
I try to tell people, I'm like, look, like there's more to life than investing. Like there really is. Like you gotta go live life. You can't just sit around for forever waiting for crypto to come back. Like just go live your life, and hopefully it comes back at some point. Usually it does. Maybe it takes a while. We don't know. But I mean, certainly the price action this year is not anomalous compared to other midterm years. It's doing the same thing it always does in midterm years. This time just feels different because the bull market was more concentrated into only a few coins. I think that's kind of where that feeling comes from. Last question. If you guys have any questions for either Guy or Rob, put them in the chat below. We only have about 14 more minutes, but last question. This one should be pretty quick. Guy, I'll start with you. If this crypto cycle were a movie, what genre are we in right now?
I think probably the obvious answer is horror. I think the call is coming from inside your portfolio.
What's the call saying?
You don't want to know.
Is it margin calling?
Margin calling.
Exactly, Ben. Exactly. The margin call is coming from inside your portfolio.
Rob, what do you think? What genre are we in?
It kind of looks like, well, it's either a disaster movie like 2012, or where everything's just kind of corroding around us, or it is like a comedy, like Groundhog's Day, which everything seems to be repeating again and again and again. Again, like you said, midterm year. This is pretty much it. So one of those two.
Do you know something that occurs to me? You guys saw that Robert Duvall, the actor, died a few days ago, right?
Yep. Yeah. Robert.
Yeah, a great actor. I kind of wonder whether it sort of feels like, that scene in Apocalypse Now where he leads the air cavalry to attack that Vietnamese village, and they're blaring Ride of the Valkyries out from the speakers. Yeah, I kind of feel that crypto is that village right now.
Just getting bombed on, decimated.
Just all hell is just descending on it from above.
Yeah, it's all the leverage traders going into gold and silver and AI.
Yeah, absolutely.
Well, it's a bear market when I ask people for questions and no one really posts any. So,
hey, there is one. Well, there was two. Somebody made a reference. 1950, there'll be flying cars. 2026, it'll happen next year, and it's true. Like when we talk about like AI, when I was talking about, I'm like, I'm sure in like 5 years, maybe it's not as awful as we think it is. Just like how we were totally wrong about this as well. So, who really knows? It could be a totally different thing.
Yeah.
Absolutely.
And
I mean, we have it looks like we have some questions coming in. They're mostly just about like altcoins.
Ben's favorite. You can take those, Ben.
Nah.
Yeah, that's your cup of tea, Ben.
Nah, yeah. I mean, okay, yeah, fine, I'll take it. Let's see. Where's the first one? Wait, there's one about Solana. I'd love to take that one. Someone says they'd really want to scoop up Solana at that price. I mean, look, Sol Bitcoin has been bleeding for like 2 years, and it's probably just going to keep bleeding, is the reality. If you look at like the Sol Bitcoin market cap ratio, it's kind of in the sort of the halfway point. I remember when the ETH Bitcoin market cap ratio was like the same level and everyone was bullish, and then it still went. I mean, Ethereum then still ended up capitulating and going down against Bitcoin. So I think that's probably what's going to happen. So I mean, like, there's going to be bounces in midterm years. There's usually a bounce sometime into early March, but then we typically go down again in April and May. So I mean, it is what it is. That's where we are right now. Here's a question. Either of you guys want to take this one? Thoughts on the Crypto Clarity Act and the impact it'll have?
Guy.
Well, yeah, the last update I saw on the Clarity Act was that there'd been no real progress made because the banks are obviously stalling it because they don't like this idea of yield on stablecoins, because that kills their lending business, whereby they pay you 0.07% on your deposits with them. So I personally don't think the Clarity Act is going to make it anytime soon. I think that's kind of stalled. I think Nick and I were discussing this on Monday on our news show. I think this one's probably stalled out. There just seem to be other priorities for the administration. They're just obviously with the midterms coming up and the fact that Democrats could well regain control, perhaps of both houses. I'm not really hopeful for it. I'm not holding my breath for it. Put it like that.
Yeah, I'll just add one thing. I don't know why the banks are doing this, but they're missing a golden opportunity just to pretty much take over. It'd be the same thing as like when Netflix sat down with Blockbuster to be bought out, and like, now we're not going to do it. And now where's Blockbuster? There's like one shop in Alaska. I mean, if banks came in and said, okay, we're gonna give you guys yield on this one, it won't be 4%, it'll be 3.25, whatever else it is. But then for these other, like for the lending fraction reserve that we do over here, we're going to increase a little bit over here. And then there's some other service that we have as far as like custodial services. You want some of that? Sure, you got to pay for it. And we can make everything that you want to do as far as a bank. And all they got to do is do that. But they just are so caught up in 1928. I don't know, but I think they're missing it. They're missing the bigger picture.
It's a good point, because people, despite everything that they've done, people still trust banks, and people would be much more comfortable holding. I know it's crazy. People would be much more comfortable holding their money in a bank and getting 3.4% interest than they would holding it on a crypto exchange and getting 4%. Like, that's a fact.
Yeah, and they could take over that business in a heartbeat, because they say, look, you trust us, you want them. They're not paying anything in FDIC insurance. We are. You come with us, we'll insure your crypto. They win. Losers, whatever.
Here's a question. Thoughts on Saylor offering 10% yield? And I think he tweeted out yesterday that they were offering 11% now or something. Look, my thought process is, if it sounds too good to be true, it usually probably is. Like, someone's getting diluted, whether it be the current shareholders. I don't really know what's going on, but the thing is like, when people offer really high yield, like with Celsius, like when they did that with Luna, like the UST 20%, and some people thought it was like an easy thing to do and that like there was no risk involved. I've always said, like, if you don't know where the yield is coming from, then you are the yield, and that's kind of like the way to think about this, because if you're in crypto and you think you've figured out this like magic way to offer yield that's like 3 times higher than what you could get in TradFi, there's a really good chance that it's too good to be true. Because like the idea that the crypto bros have been able to figure out something that like these really smart people in TradFi for hundreds and hundreds of years have not been able to figure out how to do is just kind of archaic to me, and giving the crypto industry way too much credit. So I stay away from that stuff. I mean, I like that Saylor is, he's definitely brought the message for Bitcoin, and he's done a lot of good, but I don't chase products that are offering really high yields, because I just don't want to risk it. I don't want to risk it. And if it sounds too good to be true, it usually is. The hard part with this stuff, though, is that it can go on for a long period of time before you then realize that it's too good to be true. And think about Luna. Think about how long that went on for. And that's how it ends up being such a catastrophe, is because for a year or whatever, however long, it'll look like it's working, right? It'll work in the short term. And then that's what gets people to put in even more money. It's like someone might throw in $100, and then they see that the 20% is working. And then they throw in 500, and then they throw in 1,000, and then they throw in more and more and more. And then when it all comes crashing down, they're like, wow, okay, it was too good to be true. So just because it's tough, because again, I really respect what Saylor has done. At the same time, I will always stand by the idea of, if the yield is too good to be true, it probably is. And it's just, I have to leave it at that. Do you guys have any other thoughts on that? Like a more optimistic way to look at it?
No, because it scares me that he's offering that much to bring people in. Sorry.
Yeah. I mean, yeah. I think too, I think the really hard part with Saylor is, like, he's done so much good. And I mean, he's spent like how many years now preaching Bitcoin since 2020? So 6 years. But if you're Saylor and you've spent this many years preaching it, are you like, what if you're another company thinking about getting into the Bitcoin treasury business? It doesn't look that great that like the biggest cheerleader for Bitcoin is currently underwater on his Bitcoin buys. Like it changes the narrative a little bit, right? Rob, what do you have? What do you think?
No, look how many great companies. Just look at companies and how much they struggled, but they had a vision. The founders had a vision. They just had to kind of see it all the way through, even if they were close to bankruptcy. It's just right. It's the same thing here. And I know he's down. We know he's down. But like you said, there's never been a bigger cheerleader for the Michael Saylor. And where would we be if he wasn't doing all that cheerleading? If it wasn't for that cheerleading, I think that gave a lot of people a lot of confidence. And when he's saying we're not selling, it's fundamentally you look at that and go, okay, I can get behind that.
I mean, look, he went underwater in 2022 and came back from that. I just think if you're thinking about getting into the Bitcoin treasury business, it doesn't really look that great when, you know, like the kind of the quintessential example of the person who did it is currently not in profit on their buys. But again, like I was talking with someone on Spaces recently about this, is like it's a hard thing to do, because if he just buys in midterm years and then just says he's not going to buy any other year, then it's hard to then sell the narrative of like, you know, oh, well, you go buy, but I'm not going to. I'm going to wait until the midterm year to buy. You know, like he's kind of put himself in a tough position, to be completely honest, because it's like he just has to keep top blasting the highs and hope the party goes on, you know, perpetually, which it has. I mean, it has for a while. Hopefully we can go back up in 2027 and 2028. The market can bail him out again, but certainly the midterm years suck. I also think the hard part is it's a lot easier to raise money in a bull market than a bear market. So then he ends up, most of the yellow dots or the orange dots on his chart, they're mostly just at the highs, not the bear market lows, because it's just a lot harder to raise money in the bear market.
Yeah, it's true. I mean, good thing he does it too.
Yeah. All right. I think that's about it. We're at the top of the hour here, so why don't we go ahead and wrap it up? If you guys are not subscribed to Rob and Guy, links in the description below, so make sure you guys go subscribe to them, and we will see you next week on Rob's channel. So see you guys.
Hey, see you guys.
Thanks, Ben.
Thank you.
See you guys.